What's good, everyone, and welcome to this channel. I am Sheye of Trade with Sheye, aka Forest, and this channel is dedicated to anything and everything forex trading. So if you are new to this channel, kindly subscribe, hit the notification button, and like this video. You can also share this video with your friends because it helps me, it helps the channel, it helps everyone. Lastly, you can click the link in the description below to join my Telegram channel where I post signals Mondays to Fridays. You can also join the PTI program. It is a program where I share all the signals I trade Mondays to Fridays. It is like a VIP of the normal Telegram channel, but they are both free. You understand? So without wasting any time, let's go straight into this video. So this video will be talking about candlesticks, and this might be the most important video you would ever watch. If you want to be a successful trader, you must learn how to trade Japanese candlestick. And let me just give you like a brief history of the Japanese candlesticks. So many years ago, when people were trading the financial market, there was no computers, no technical analysis. People only used fundamental analysis. That means they were trading with the news. So the way they knew the time that it will be time for them to trade, when it's time, they used what Japanese candlesticks to identify when it will be time for them to trade. But now we have computers, we have technical analysis, we have all the indicators in our trading view, to trade. Japanese candlesticks still remain because it is a very, very important tool, in helping us trade. This is why you must learn Japanese candlesticks. And in this video, you'll be learning Japanese candlesticks from A to Z. Whether you are a beginner or advanced trader who wants to push, yourself to be better trader, you are all welcome here. So because of how broad or how wide Japanese candlesticks is, I will be dividing this video into three parts. This is the first part, and the first part will be talking about how to read and understand candlesticks. The second part will be talking about how to trade these candlesticks on the chart, while the third part will be talking about the best candlestick patterns. So without wasting any time again, let's just jump straight into this video. So there are two types of candlesticks: the bullish candlestick and the bearish candlestick. These are the two types of the candlesticks. So as you can see, most of the time the bullish candlestick is represented in green, while the bearish candlestick is represented in red. So now let's see how these candlesticks are formed. So as you can see over here, the green one would be the bullish in this case, while the red one will be the bearish in this case. So how the bullish candlestick is formed is price starts at this point over here, and then price goes up and closes here, because bullish means that price is going up, while bearish means that price is going down. So price opens from here, goes up, and close here. While on the other hand, for the bearish, that means price is selling. Price opens from this point, goes down, and closes here. So before we even talk about this, I forgot to just identify the components of a candlestick. So we will do that now. So as you can see, this part over here, this rectangular part over here, it is known as the candlestick body. It is known as the candlestick body. While these two things looking like line, both on top and below of a candlestick body, is known as the wick or the candlestick shadow. I hope you're understanding. The wick or the candlestick shadow. You can either call it the wick or you can call it the candlestick shadow. So let's now go back to the to the bullish candlestick. So as I said earlier, price opens from here. That's the beginning of the body goes up and closes at the end of the body. That's for the bullish part because price is buying. But for the bearish part, price opens from the top of the body and goes down and closes at the bottom of the body because price is selling. So this is just how you can identify a bullish candlestick and a bearish candlestick. So remember, the two things looking like line are called the wick or the shadow. You understand? So now let's jump into buying and selling pressure. Buying and selling pressure. So if you can understand this, then it means that you do not need to memorize candlestick patterns, because the buying and the selling pressure just tells you and gives you information on how or why a candlestick is formed the way it is formed. So now let me just show you a quick example. So as you can see this candlestick over here, let's start with it. As you can see, what happened in this candlestick formation is that it is a bearish candlestick, which means that price is going down. So however, as you can see, it has a longer upper wick. So what actually happened is that price opened from here, from the top of the body, but did not go down. It first went up to this high before sellers now came into the market and pushed the price down to close at the bottom of the body. So this longer upper wick is known as the selling pressure. The selling pressure. So this is how this bullish candlestick is formed. So once you see something like this, it means that there is selling pressure and you should be looking to enter for a sell. On the other hand, when it comes to a bearish candlestick with a longer lower wick, what happened is that price opened at the bottom of the body, and instead of price going up because it is bullish, price went down. After price went down, it means that buyers came into the market and pushed the price up and closed at the top of the body. This is what happens, which means that buyers are in the market pushing the price up and you should be looking to enter for a buy. That means there is buying pressure. So before we move along, let me just quickly go back. I need to show you guys something. So this top of a wick is known as the highest point that price went, while this bottom of a wick is known as the lowest point that price went. So whether you are trading in the 1 minute time frame or 5 minutes, 15 minutes, 30 minutes, 1 hour, within that period of time, just watch the candlestick and see how it is formed. That means, let's say we are trading the 15 minutes time frame now. So let's say in that 15 minutes time frame, price went to this highest point. This was the highest point that price went to, and within that same 15 minutes time frame, this is the lowest point that price went to. So this is the highest point here, this is the lowest point price went to. So now we can move forward. So now, one thing you need to notice now in the buying and the selling pressure is that you should identify what a candlestick, how a candlestick is formed at a key level. Remember guys, do not trade at the middle of nowhere. That means when price is just consolidating, do not enter a trade there. Always focus at a key level. So for example, let's say this is a key level. So if the key level is up, it is called resistance. If it's down, it is called support. So this is support here, this is resistance up. So up is resistance. So now, for example, let's say price is going up, is buying, And then at the key level, you see that, the candlestick price opened at this point. Let me make it clean so that you see it. So price opens at this point, and then it was going up to this highest point over here. Then sellers came into the market and pushed the price down to close at the bottom of the body. As you can see, it means that there is a selling pressure at a key level, which means that sellers are in the market and buyers have lost, the strength. That means your next move, you should be looking to enter for a sell, because price would be going, down. But for example, let's say you just enter for a sell in the middle of nowhere. So let's say you entered for a sell at this point, you will see that price would is still going up. So that means you would, enter losses. You understand? So this is what you should be looking at: a candlestick formation at a key level, whether resistance, or if it's at the bottom, whether at the support level. I hope you are understanding. So always focus on the formation of a candlestick at a key level. So basically, as you can see these two candlesticks, there is one thing you also need to have in mind. The color of the candlesticks does not actually matter, because for example, this might not be there. So let's say this isn't there. Let's say this isn't there, but this has a longer lower wick. All it's just saying is that, buyers have entered the market and they are pushing the price up. So it can be read, trying to fool you that it is a bearish candlestick, but it means that buyers have entered the market and pushed the price up. So you should be looking to enter for a buy, even though it is a red colored candlestick. So the color of a candlestick does not matter at all. I hope you are understanding. So now let us look at these two candlesticks over here. Let us compare these two candlesticks over here. Which one do you believe have more pressure? Which one do you believe have more pressure? Have you picked? Well, if you pick the first one over here, you are correct. And as you can see, the first candlestick has a longer body than the second candlestick. And what it just means is, the bigger the body, that means the more the pressure. So let's say these are, okay, yes, these are bearish candlesticks over here. So as you can see, the first candlestick has more selling pressure than the second one. So a longer body means that there is more volume in the market than the second one, stating that there is more momentum in the market to sell. So always, compare the size of the candlestick. If it's very, very small, it means that either buyer or seller are losing momentum. But if it's very, very big, it means that there is much momentum in the market. So now let's look at these two candlesticks over here. As you can see, they don't have any wick. They don't have any wick at all. They only have body. So if you see this kind of candlestick, it means that the buying pressure or the selling pressure is very, very extreme. So if you see something like this, you identify it, you just know that there is, an extreme buying pressure or selling pressure. So you should be looking to follow, along the pressure. So if there is an extreme buying pressure like this, it means that you should be looking to enter for a buy, especially if this candlestick forms at a key level. I hope you're understanding. So if this forms at a support level, that means down. Let's say price has been going down, and then you now see this bullish candlestick with no wick, it means that buyers have come into the market and the momentum is high. That means you should be looking to enter for a buy. And it is opposite for the bearish candlestick. So let's say it is at a resistance level and price has been going up, then you see a bearish candlestick with no wick. It means that sellers are come to the market and you should be looking to enter for a sell. So this is just how you can identify these candlesticks and trade with them. You understand the story a candlestick is telling. So now there is also something known as momentum. Always watch out for the momentum of the candlestick. So as you can see, this is a support level over here, and as you can see, price has been selling, but this is a big candlestick, then it reduces its size, then reduces its size. So what this just means is that sellers are losing momentum, and this is now happening at a support level, which is a key level, which means that the next move you should be watching for is to enter for a buy, because sellers are losing momentum. So you can still wait, don't just enter for a buy immediately, because it can be a fluke. Price can still continue selling. So you have to watch out for the next formation of candlestick. So let's say the next one is now like this with a longer lower wick. Just know that, okay, yes, it means that buyers are introducing themselves into the market, and your next move should now be that you should enter for a buy. I hope you are understanding this. So this is just basically how to follow the momentum, watch the candlestick and see how they are formed at a key level. So now there is something called sentiment. The longer the lower wick means that buyers are pushing the price up. I hope you already know this, because yes, definitely you already know this. So that's me. So it means that, as you can see, price opened at this point, and then price went to this lowest point over here before buyers now enter the market and pushed it to close it at the upper part of the body. I hope you're understanding. So the longer the lower wick, it means that buyers have entered to push the price up, stating that the downtrend is losing strength. It means that it is losing strength, and you should be looking to enter for a buy. So the chances are the next candlestick that you will see would be a bullish candlestick. And it is opposite for a bearish candlestick. It means that price opened here, and instead of it going down, it went to this highest point before sellers came into the market and pushed it down to close at the bottom of the body, which means that buyers are losing strength and sellers are now in the market. So you should be now looking to enter for a sell, and you don't just enter immediately. You still wait to see the formation of the next candlesticks before you enter. So you will most likely see that the next candlestick would be a bearish candlestick, which means that you can now be entering for a sell. And remember, always trade these candlesticks at a key level. So the reason why I am saying at a key level is because you don't just trade a particular indicator on its own. If you do that, it is just the same thing as doing guesswork. So you add other indicators. So I've been saying key level. So key level is just a way of of adding more confirmation before you enter a trade, whether to buy or sell. You can also add RSI to it. You can add your moving average, or any other indicator how to use with this candlestick. The more confirmation you have, the more your trade is safe. I hope you are understanding this. So this is the end of this first video on how to read and understand the candlestick. So in the second video, or the next video, I'll be showing you how to trade these candlesticks on the chart. Probably I'll do that on my laptop, so that we'll have a wider screen and you would see how it is done on the chart, while the third video will be the best candlestick patterns to use. So if you really found value in this video, remember to give this video a like. You can ask questions by dropping comments. Remember to subscribe to this channel. Remember to turn on the post notification button. Remember to join the Trade with Sheye Signal channel. Remember to join the PTI program. So this is the end of this video in particular. Till the next one, do enjoy the rest of the day.